Well, it looks like we got a couple of speeches going this morning. Looks like there's a big one right at 8 o'clock.
Okay, so top of the hour, you have to be careful with that. Let's see here. Just pulling up. All right, what do we got? We got talking head. So that's good. Like a talking head in the industry is just like a speech that starts in like 8 minutes. It's in orange. So the thing with talking heads is, like I was saying, is it doesn't happen right on the dot. Like at the top of the hour, you got a couple orange that'll happen. Reports happen right on the dot. So talking heads can happen anytime. Because it's orange, I'm not going to, hopefully we'll see some movement. And if we see something just pop, that means that it's probably due to the fact that they said something that the markets are reacting to. So when it comes to top of the hour, if you guys can watch the clock, just let us know, and so we can see if the news. Sometimes when it's orange, it could be like, a pretty good event. Well, I guess we do have a red. We have the president's speech, again, another talking ahead at 8. So we'll see. When it comes to 8 o'clock, we'll start to trade lightly. So somebody could about 10 to 5-2, let's make a note. Just make sure that we're light around the top of the hour. All right, let's go ahead and see your screen. Just opening up the comments. Thank you guys for attending. So I switched the room around. Instead of having you guys jump in and sit and wait for me, I did it to where when I'm done, when I'm in, I'm starting the meeting. And the reason why is because I don't know why, but I guess it might be confusing because all throughout the day and all throughout the night, people would jump into this room and it would post a recording every time somebody would jump into the room. And so I literally had to have like 50 to 60 recordings a day, and I have to sift through them to find which recording is the actual recording. And so that's why I switched it. So to only start recording when I started. And the other one is sometimes you guys would come in early for this meeting, like an hour early, which would make the recording like 2 to 3 hours long. And so that's why I switched it, so that it would only start recording when I was ready to record. So, all right. Let's get going. So we have a unique trading thing today. Yeah, go ahead and minimize that.
What's unique about it?
Well, go ahead and make this 1 minute chart a little bigger. Yeah, there you go. Just because I want to be able to see your screen's really tiny.
Says you. I got no problem with it.
All right. So what's unique about it is, if you don't mind, let me just drive. It'll be a lot easier than having to tell you what to do. So I can just show for a second. So what's unique about it is, if you look at the 5 minute chart or whatever, we're technically starting our trading day in an outside range, meaning I have no data to the left of us to really tell us where support and resistance is. It's been climbing up. It's been climbing up all night long, and pretty much for the past few days, ever since probably about right here, it's been climbing up and up and up. And so our trend is definitely up. And because we have no data really to support to the left of us, you kind of have to go out. So what I mean by out is you have to change. You don't have that view. You have to change your time frames. So we're going to go out to maybe the 1 hour and kind of see. So if you go out to the 1 hour, now you start getting data to the left. And the 1 hour data sometimes can be even stronger support and resistance lines than 5 minute, 15 minute. If you certainly don't have any support and resistance lines, then you do have to go out and find out where your next support is or your next resistance is, right? And I would say that it came, and you see that on the 1 hour chart. In fact, let's just
How about the
make it bigger.
15-minute chart, Dave?
The 15 minute, do you have data? So you don't even have data on the 15 minute.
No, a natural line you've told us is the $1 one, right? The parity.
Oh, yes. Yeah. So that's where it's trying to go. It's going back to the dollar. So the natural kind of what I'm not necessarily a natural line, but anytime you get a round number. So if it comes up here to the dollar, wherever the dollar is, I'd probably say that it's kind of going to be right in here. It's just kind of a natural support and resistance line anytime it's a round number. It's not as strong or as heavy as a real, like right here. So price. I don't think you have this either. So okay, so this is kind of where we'll be watching on the 1 minute chart. And you can see that it already came up and tested kind of this area right here. So if it breaks above this price, which is 99291, there's a good chance it's going to come all the way up and come all the way up to the top of that red line and play. Now, because it did come up here and hit it, there's also a good chance that it could come back down during our training session because it hit the top of that red line, and it could come down for the next hour before it goes back up and hits that line, right? And so that's what I'm saying. It's kind of a unique situation where we don't really have a lot of supporting data, but my bias is definitely still going to be to the upside. And so if I see any selling opportunities, we're going to sell light and maybe buy and look for buying opportunities in this session, unless we get selling signals, which means that, okay, we are in fact in a sell. Does that make sense, Andrew?
Yeah, it does make sense.
All right, so we're going to go back to the 1 minute chart here. We're going to see what kind of activity. So this is our red line that if it crosses, well, it's got to cross the top with the body to be like, okay, it's going up. You see how it kind of came up, touched that red line and said, nope, I'm coming back down, right? Now, what we're going to do is we're going to look, well, how far are you going to come back down? And this is probably a really good place for it to start buying in early. And so these are the points that we're going to watch. If it crosses this red line, then we're probably going to start getting into some sells as it would come down. And then here's our major, like, okay, absolutely, we're now sell biased. So we'll continue to be looking for buy opportunities all the way down to this bottom line, right? And yeah, with that, any questions before we start getting into it? So I'm going to have you take control, Andrew. And the first thing we're going to do is we kind of looked at what our trend is, kind of talked about our bias. Now the next thing we need to do is know what our price cycles are. So do you remember how to measure that?
So yeah, you do the thing.
You do the
button. You do the middle button.
Yeah. Go ahead.
And click. Isn't it from the highest point to the
lowest?
To the lowest. So that would be probably down here.
Okay. So that one is a 17, but is that a 1 or a 2 price cycle?
There we go.
Is that a 1 or a 2 price cycle? So the way to figure that out is go back is you have to go back. So you don't want to just measure one.
Okay.
And so here, I'll do it really quick so we can get into trading. So I'd start with this one. So there's a 9, there's an 8, and then I'd start with that one, and there's another 9, and then all of a sudden it pops up and there's a 10. And then, so I would definitely say that 17 is a 2. And then you got this is like a 5. And if it comes up here, so I'd probably say we're between, on a normal price cycle, probably be between 8 and 10 right now. On a double, we're going to be at 20. So we want to.
So you're talking 8 and 10
pips.
Oh.
No, not candles, but pips from the bottom to the top.
Gotcha.
Right. And so we're only looking for 3 or 4 pips. So as long as we can get 3 or 4 pips inside of a move, and this is the other thing that we didn't do yesterday that we need to do a better job of is knowing what the spread is, especially when you come into the top of the hour. That spread could change, it could move. We want to be cognizant of that. As a news event happens, the spread will also widen. All right. So as long as we have 4 pips plus spread, so as long as there's like 4 pips in there, we can start buying. So go ahead and start getting a buy on early. And I say early because it could drop right here, but we'll get into the market. And this is me saying with one trade, I do this a lot. Because I just need to get into the market, right? And so
test it out, right?
Exactly. Kind of like a test trade, but I'm not really interested in the market if I don't have any skin in the game.
Mm-hmm.
So if I only enter in like one trade, it means that it's not the best time, but I just need to get in, right? So yeah, it's called addiction. I love it. Yeah. Oh, Nick gave a great point. So when you're measuring price and time cycles, when your price cycle is how far it's moved or not, and how far it's moved in pips, and your time cycle is how many candles. And so each one of these candles represents 1 minute. And so if we measured out our price cycle, we could say that right here, this price cycle right here is 17 pips, and it moved in 7 candles. So 7 candles is 1 minute because we're on the 1 minute chart, right?
Right.
And so if you start getting that, like, that moves 7 pips in 5 minutes, that moved 6 pips in 8 minutes, right? And so with that logic, the next move should put us, 5 or 6 pips in, 5 minutes, right? So right now we're moving about a pip a minute.
Pip a minute.
Pip a minute. A ppm. Pip per minute. ppm. Pip per minute. All right. So as it pops down, go ahead and buy. Like I said, we're going to look for buying opportunities. Where's mine?
Yes.
So here would be a good buy opportunity. So what you got in, and then we're going to look for buys all the way down to here. Start putting a layer on, but that's okay. So now,
so another one now.
Yeah, go ahead as it drops down. So what we want to have is enough money on these ones that if we want to take this one off when it comes back up and it tests this right here, if it stalls, that's where you'd get out of your trades. This is what we call the action point, was where you take action. Does that make sense, Andrew?
Mm-hmm.
Yes.
So if it stalls, you'll go ahead and take out your trades, and you should have enough money to cover this trade, which will be a loss, and this one might be a break even. If it breaks through and does not stall and keeps going, this is your next action point. So this is action point on a stall, and that one's another one. And if it breaks both of those, then Kazaa, you're in the money.
Huzzah.
What's our Disney movie of the day today, Jimmy?
Yes.
Disney movie of the day.
Love
Lion King. How about
Sleeping Beauty.
let's do a Lion King, huh?
it. Oh, Shuenya.
Oh, it's
I
only
think that's
Aladdin. That's it. It's only
No,
Aladdin.
I think the Lion King has great trading analogies, right? Because you can say Hakuna Matata.
Hakuna Matata.
Whenever you, it's like, you know what? It doesn't matter. It's in the past. Don't focus on the last trade. Focus on the next trade.
I'm trying to find my Disney props. I'll be more prepared tomorrow.
Come on, go get your Lion King onesie on. You have it.
I got the underwear. The underoos. TMI over here.
Yes, TMI. Everybody is like silent. All right.
Okay. All right. All right, Jake from State Farm.
Exactly. That's what Cool's wife would call me sometime, because Cool would be talking to me at like, sometimes we'd talk at like 1 in the morning. I was like, who are you talking to? Jake from State Farm.
Yankees.
Dave, you still have my mouse, just so you know.
No, you got it. You take it back. Take it back. It's all you.
Here we go. First action point, right?
Yep. First action point.
I'm lagging out. So, because
What's that?
You still have my mouse.
Go ahead. Take it back.
How do I take it back?
You have it. It's all you.
Okay.
Oh, Cool's on mute. Cool's trying to say something. So we can all talk about Cool, and he can't say anything because he doesn't figure out he's not on mute.
Yes, sirree.
Hey, there he is.
So looking at Pete asked the question, I find myself not sure when to get out and when to let it keep fighting to break through the action point. I keep clicking the red X with small profit and then watching y'all stay in when it pops up another price cycle. So my thing on here is like, even though it's kind of stalling right there, we need to flip gears here real quick. So minimize this and then open up your account one.
Minimize this?
Yeah, minimize this and open up the account one, which you can't because you have to make your...
That's an hour. He's on the hour one.
Yeah, which is fine for today. Yeah, you got to open up that and then minimize it again. See how we have $7 in profit right there? To me, that's an easy way to say, okay, I could close out of everything and cover this trade and still take a loss, right? Or not to, and be okay with, I wouldn't be taking a loss because I have enough meat on the bone to cover everything. So I constantly look at where I'm at in relation to all of my trades. But answer Pete's question, if there's not enough profit, then I just sit on my hands and wait for it to move up. The other thing too is, where am I at in the price cycle? So that's the other question I ask myself. Where am I at in the price cycle? Is this action point before the end of the price cycle? If it is, then I'm okay to kind of sit on it as well. If it's at the end, which I would say this would be at the end, that's a bigger stall point for me, and I'd get out there. And so
get out.
No, I think it's going to cross. I mean, you got 30 seconds before it really gives you that confirmation, but I do think it's going to come up here and have an action, right? And so sitting on it is appropriate. Now we're seeing, should we get out or should we stay in? And let's go ahead and stay in as the action is still pushing above. Do you see that candle?
Yeah.
It's still kind of pushing. And then it kind of retreated, but that's okay. As long as it stays above this line on that candle, we're okay to kind of sit in for another test to the high right there.
Gotcha.
As long as it stays there, which it did on the close, right? But we want it to, if it tests again, the likelihood that every time it tests that action point or the resistance area, every time it tests, the stronger, the more likely it is to break. Right. And so you can just kind of keep that in the back of your head. And so this was kind of test one right here. This was test one. If it comes back, we'll get test two right there. And if it does dip down on a candle, and you're more than 30 seconds on the candle, go ahead and put another 1 or 2 buys on. If the candle shoots down, if we get a wick down, right? We get a wick down and your time frame is greater than 30 seconds, probably greater than 25 seconds, then do that. Because that's just like an exhaustion or just kind of working. Let me clean my chart up because it's kind of hard to see. It's got to shoot. Yeah. If this candle, so get ready to buy, go ahead and buy.
Just 1 or 2 or?
Yeah. If it reaches any further down, buy, right? Okay. And so what we want is to see, so a lot of times what we'll see is that candle will come into play. And then in the last little bit, it'll
right back up.
It'll go right back up. We see that sometimes. And if it doesn't, that means it's going to come down and test the lows. We'll see. I like that play because usually it does, as long as it's in the first 30 seconds ish, then it comes right back up. All right, so in order for it to test again, it's gonna. I hate that when my name pops up on them. We're gonna need it to cross that with a body. Can you? Well, we're close to action point. So in a second, when we get to part where we don't need to sit closely watching the trade. All right, so if it fails to break this, which it shouldn't, but if it does, that means it could just come back down again. So we might want to think about just getting out if it comes back up and stalls here again, let's see. And then just kind of recycle our trades, meaning that we'll take our profit, comes back down into this area, and we'll start all over again. But this is the part where you're like, okay, are you going to break or retreat? What are you going to do?
Come back down. Rinse and repeat.
Yes, exactly.
So
this is the part that kind of is more about feeling than it is about there's clear, right? And so you kind of start looking at these wicks that are forming on the top, meaning the pressure's coming in to push it lower. So if you do get a pop-up, I would go ahead and take that because it's looking like it's going to come all the way back down and test. So if you get one of those candles that kind of reaches, like right now, go ahead and take those. Yeah. And then as it comes back down, as this candle retreats, we'll start buying again. And let's clean up your charts here real fast. We need to take that off of yours. So Control A. So yeah, there you go. Delete that. You need to take those settings off of yours. Okay, so as it retreats, as this candle kind of shrinks right there, go ahead and start buying again. Now, again, we'll buy all the way down to here. So as it keeps going lower, like just keep putting buys on until you get into a layer. A layer is 4 trades. As it goes lower, we want to buy. So we want to get about 4 trades on all under this line. That's what we're looking for right now.
So again, we're going to trade 4 lots so we can be in maximum of 2 lots, which is 8 trades, right?
Yeah. So so go ahead and throw a few more on there. So there's a couple things that we've experienced over the last couple of days that I want to just bring to your guys' attention. Well, let me ask you this, Patricio. When do we trade with 2 trades per zone, per layer, I should say, not zone? When do we trade with 2 trades per zone? Per layer, and when do we trade with 4 trades per layer? What's a couple key indicators?
Well, when we're close to an outside range, we do it light. So we're like 2 trades per lot, right? Is that what you're referring to?
So say that one more time. And when what happens?
Well, we're close to an outside trade, not on the normal trading zone.
Okay. So yeah, that was actually one I didn't think of, but yeah, you're absolutely correct. So there's 3 reasons why we would trade light or trade light. So that's one reason. What are the other 2? That we experienced just recently as of yesterday.
When we are trading on an outside range, we do that also, and can think of the other one.
So there's 2 more. So one, when your price cycles are greater than 10,
okay,
and they're large, we'll trade light, but go for bigger pip gains. So meaning right now we're going for 3 or 4 pips, but when price cycles are like 15 to 20, then we're going to go light on our trading because we got to withstand 3 price cycles, right? And 3 price cycles of a 20 pip price cycle could put you at 60 pips and losing 60 pips on 1 or 2 trades. And you got to be light enough to withstand that. Does that make sense?
Right.
So that's another indicator that you need to be light. All right. So it's testing the top. Did you get 4 trades on?
Yeah, 3 on. I didn't.
Oh, you failed your mission. You had one job to do, Andrew.
It didn't come down low enough, and you told me not to stack them on top of each other.
No, you could have put one right between the bottom and the top, but that's okay. It doesn't mean you need to put it on now unless
I know.
Okay, so if you're up against a breakout, right, like a major breakout, you trade light. If price cycles are greater than 10, you're going to trade light. And what's the other one? It happened to us yesterday.
News event.
You cheated. You cheated. Thank you. Because you guys looked at chat, didn't you?
Yeah, I've got it pulled up right here. That's not cheating. That's using my resources. Thanks, Amanda. It's an open book test. No, it's a phone a friend. There you go, phone a friend. No, exactly.
Could you repeat that, David, please?
So there's 3. I mean, there's probably others, but the 3 major reasons why you're going to cut your layers in half, more or less, which is trading light, is when you're up against a major breaking support or resistance line, right? Where if it could break, it could run. And so you want to be light because it could also bounce. And so you don't really know if it's going to break and run or bounce. And so if you're trading the bounce, you want to be light. And if you're trading the run, well, you want to make sure that you're in a good position to do so. All right. So Andrew, hit the end button on your keyboard so we can see the time. I always see the time on that candle. So just hit the end button.
25.
No, look at your keyboard. It's a lot faster. All right. So we're still early in this candle and it could retreat and not break, but it's a good sign when it's a strong candle like that. It's a good sign that it won't break, but it still could. And so we don't want to make any decisions based upon this breaking. However, if it does pull back and close below, we'll want to get out of our trades and just wash, rinse, repeat, because that means that it's just pushing down and it's going to cycle down again. I don't think it's going to happen because the candle is such a strong candle and we're really late on the candle. So now what you could do here is you could add to your position if it comes down and touches this. So if we get a candle down, we can add to our position as we're climbing for the next action point, which, this is kind of one, this is a little one, and then there's one too. So yesterday I got called out in Discord and in real life. And I'm not going to mention any names, Patricio, that I didn't do a good job of explaining. So I'm trying to do a little bit better job of explaining when I start talking about things that might be foreign to not new traders, but new traders learning this system, this technique, right? Because I do use different terminologies that I've kind of found that helps explain in short term what it is I'm talking about, like action points. And an action point is basically a support and resistance area where you need to take action, right? And there's plenty of support and resistance areas where you don't need to take action, but an action point is where you do need to take action. So like right here, it came down. So I'd add to your positions like I was talking about, Andrew. Okay. Now what we don't want it to do, if it does dip down with this candle, go ahead and add to your positions more. But we don't want it to close lower than that, because what does that tell us?
That it's going to turn on us.
Well, that this candle right here that broke through was basically a fake out, not a breakout, right? Then if that's the case, if it does close lower than this green candle, then you're going to want to get out of I wouldn't say get out of these trades, but get out of your winning trades so that we can recycle these. Again, that's another terminology that I use, is recycling trades that you don't hear often. So we're still early in this candle, so I'm not going to say we need to do that just yet, because it does have to break. It has to break that red line, right?
So you're saying get out of the ones that
right. And so what I do is I come over here and I hit my profit, and so I stack. So come over here and hit that word profit, and it hit it again. So it makes my profit trades, the ones that are in the money, on the top. And so if it does break that, then I'll go ahead and just close out of the ones that are making money for me. Does that make sense?
Yep.
Because I don't think this layer is yet, this layer, or these trades right here are not a closeout for lost trades at all by any stretch of the imagination. But we might as well take the money on these trades, and as it comes back down again, just put them right back on. Does that make sense?
Right.
Mm-hmm.
That way you have more for your position, right? You're just managing your position, your bullets, essentially.
Right. And I think a lot of times traders will just sit and let that ride and then wait to come back up. But I'm like, no, take the $5, get back in, get another $5, right? Turn that, double that, right? That's why I call recycling your trades, is when you're getting out and getting right back in. You're recycling your trades and you're just doubling your opportunities.
Mhm.
John, John Scott in the chat.
Let me just double check. Okay. Is your definition of an outside range when you have no data to the left of the time frame on your chart? That is a definition of an outside range, and that is the one that I will say is the nemesis to trading this way. And so when you do wobble, which is what we're doing right now, when we do wobble technique, you have to have data to the left in order to trade the wobble, right? Once you have no data to the left, so like if it breaks above here, we are no longer wobbling. We're riding the trend wave, right? So we're riding the wave when that happens. And preferably, this is why I wobble with the zero take profit, is because if it does turn from wobble to trend wave, I'd love to be on that trend wave and just ride the wave all the way to the shore, right? So that's why I do that. So that is one definition of an outside range, but that is
all the way to the bank.
That's right. That's what you have to be cognizant of when the market shifts. And so that's a good indicator of when the market shifts, when it breaks above that, right? So, all right, so back to here again. You should have, so one of the things you could have done that I didn't tell you is, again, on this candle, when it pops down, you could add it to your position as long as it was early in that candle. but now we can't add, we can't put any trades on because it's testing the top. You see?
Right.
And so that would not be a good point to add, because if you add a trade, it's going to put you in up here ish. And we don't want to be in there. So anytime you get a pullback down to the bottom, we'll go ahead and add to our position. And this is our action point right here. So this is where, if it does cross this with the body, which it's trying to do, and we got
8 seconds.
Yeah, exactly. We got 5 seconds, which it looks like it's going to, it's a good indication. Now we're at this next action point right here. So we're early in the candle, but no, do not buy here. Hover over the close all. That's I don't want you to add to your position. I want you to take the money and run if it doesn't cross over.
Gotcha.
So we're early in the candle. It's still kind of flickering, but I'm going to say it's not giving me good feelings that we're going to break this. So your call. What do you want to take it right now? And yeah, go ahead and take it. So I saw that blue at the end of that. All right.
Mm-hmm.
Now, yeah, we got to fix your template here so that it doesn't draw those. Hit control, yeah, and then delete. You're getting pretty quick at that, but I don't like that. So, all right. So now, in order for us to get back into trades, it needs to cross this line with a body. And let me drive here for a second, Andrew, so I can take that off.
There you go.
And you just do this really quick.
Okay, hold on, because I need to do the same thing.
All right, so you just got to load your 1 minute chart.
Yeah.
And we'll come down here and make sure your trailing stop is off for you. I don't think you've done that. So where it says trailing stop, double click on that, drop it down, turn it off. I don't like trading with trailing stops. And then right here where it says visual settings. So you just keep scrolling down until you see visual settings. We're going to turn everything defaults. And then we're going to save that.
So everything should be false on visual.
Mm-hmm. And then we'll hit OK. All right, so go ahead and throw some more buys on, Andrew. And just wash, rinse, repeat. So if it breaks through, so go ahead and wait for a second because it's testing to see if it's going to break through this area. And so might as well get a better position of trades if it does break through. I'm hoping it'll break through and then not break this line, but just come down with the candle and wick out. So, all right. Didn't do that, but these two trades are still in a really good position for profit. So I like that. Let's go ahead and clean up your chart while we're waiting to get those blue arrows off of there. All right. So it's testing this, or it could break. So if it does pop down, you know what to do.
Buy some more.
Yeah. Again, we're going to keep buying all the way down as we're riding it all the way down to there. Now you could have as well, for all these wobblers, you could have taken a short here, but remember at the beginning of the day, we decided that we were going to be more buy biased and looking for buy opportunities. If we were in a consolidation phase, I would be selling here, buying down here, but we're not in a consolidation phase. We're in an uptrend movement. And so it's better to play with the trend than against the trend. Right. And so when you're in a trend movement. And so I'm still wobbling, but I'm just looking for buying opportunities and trading those normal. Now, if I do get a sell, like this is a sell, high probability trade, I will take that as well. So I just wanted to let you guys know that that's why we're not selling at the top of price cycles and buying at the bottom. It's just because it's more likely to break to the upside if it breaks, because that's just would follow trend, right?
So can you clarify high probability trade?
When I say high probability trade, so as a level 3, and we're not really going to talk about it because that gets more into trading, but as a level 3 trader wobbler, you should have about 3 trade setups that you see. Like Patricio, in our recent trading, you've been able to identify M's and W's pretty good, right? And so whenever you see an M or a W and you know how to trade that could be that could be one high probability trade setup, right? And so if you see that, how do you trade that? For me, I like abnormal candles that are 2 to 3 times the subsequent sizes of all the other candles, and I usually fade that, right? And so if you have 2 to 3, I like to have 3 different high probability trade setups that you trade, and you generally are, you have a probably greater than 80% chance of that trade setup working out. That's a high probability trade setup. And so I like to have those in my pocket at all time, no matter the direction, no matter the trend, it just usually works. All right. So we're in 2 layers. So you're okay to be in 2 layers, but I'd wait on the next trade to see if it comes down and tests this, because it looks like that's what it wants to do. Okay. You can kind of see how it came up and then it's price cycling back down to test that. So if it comes down here and tests that, go ahead and throw another buy on, but we're not going to get into any more than that right now. So we're going to keep it at 2 layers deep, which is 8 trades. Okay. And just in case it does break and give us a 2 price cycle. So if we go down another price cycle, then it would be 2. There's 1, and then it'd go down another price cycle. Go ahead and minimize your order list. Don't really need it. And I'd like to see the data. Minimize this guy right here. There you go. I'd like to see this data. To me is more important than seeing your trades. Unless they were all green, then we want to say, oh, look at me. Look at those trades. Thank you. 50, 50, 90. So I don't know if everybody knows that 50, 50, 90 is kind of a cool story. I asked them why 50, 50, 90. And if you don't mind me sharing, obviously put it out there. But correct me if I'm wrong, but I'm trying to remember. He's a Marine. And if you give a Marine, Navy, if you give a Navy soldier instructions, is a 50, you got a 50-50 chance of, you say it, man. I'm going to slaughter it. You got a 50-50 chance.
Dave the Butcher.
I'm going to slaughter it. But it's really, I thought it was pretty cool. So it's a Navy thing that I'm not familiar with. Oh, my alarm is going off for the 8 o'clock trade room that I do on Tuesdays, but I'm not doing it today because of boot camp.
10 minutes too.
I'm not going to do it today because of boot camp, because I got to get over to boot camp. So I was going to do it, but they asked me to be there earlier. So I got to get ready and go over there to teach.
We buy
the
now.
50-50 gave you explanation.
Okay.
So we buy now.
Give me a 50-50 chance, and I'll guess, and then I'll be wrong 90% of the time. That's right. You give a soldier. Man, I was gonna butcher that. I knew I was gonna butcher that. So thank you. But it's cool. So now when you see him, so that it's kind of a cool little thing that I didn't know.
Definitely thank you for your service as well.
Amen.
For sure.
Yeah, my cousin-in-law, he's a Navy fighter pilot. And so he just got stateside. It was awesome.
24 years was long enough.
I bet. Yes. Ooh, all right.
There we go. We got this pop. So again, we're early in the candle, so not too excited, but we want to make sure that it stays above that.
Oh, quick draw McGraw's back.
Did you get out?
No, I was about to.
So we want to make sure it stays above that. And as long as, within about 10 seconds, the candle is usually going to do, but there's been times where in the last 2 seconds, it like, oh, you dirty candle. But generally speaking, if you're within the last 10 seconds, the candle's gonna stay where it's at, right? But again, we don't want this blue guy to come down here. So where's our action point, Andrew?
Our action point on this one is going to be here.
Okay. Yes, but that's kind of not enough meat on the bone. So we're gonna play this one. Okay. As our
that was my second guess.
Okay. No, that's a good one. And if we were down here with our trades, I'd say yes. But because there's not enough meat on the bone to take, it's worth kind of
letting it run,
and because we don't think it's going to cross this red line. You see that? So
what you're saying is we need one more skin in the game.
Or if it would have come down here, if we could have put more trades on, like if it would come down here, right? But again, and so somebody reminded me just a minute ago, remember the news coming up, right? And so we are pretty light right now in our total position, but we don't want to give up anything that we've gained today either. And so if we can get a position to where we're out, if it comes up here and tests up here and stalls, we're going to go ahead and take our profit. And then we'll sit on our hands for the news event. Does that make sense? And
then just kind of see which way it goes.
Which way it goes. Exactly. And so it's better to be safe and not have any trades on if we can do that. If we can get our trades to become profitable and just take them out before the news event, it's always better to be clean on a news event than have to fix trades during a news event.
Or the next day.
Because it happens so fast that sometimes you can fix it. Like I made a huge mistake yesterday in my trading, and it's a noob mistake. I'm just going to share it with you guys. And I was able to recover on it, but it was a missed opportunity by a long shot. So for whatever reason, and I'm pretty sure it was a news event, but I wasn't cognizant of news events because it was in the evening time, and I usually don't look at news events. But it shot down, like right here, it just shot down all the way down to here. And this was like, it literally was like 20 pip candle out of nowhere. And this is what I love trading. This is what I live for trading. What do you do if that happens, Andrew? What do you do if you get a 20 pip candle just shot down in the other direction?
Cry and call you.
No, that's you can do that. Cool can't do that because it'd be too early. I wouldn't answer. All right, you fade this bad mama jamma. You buy. But what did I do? It came all the way down like this, and I sold here. I sold, and a reason why I sold is because I hit the wrong button.
Yes, sir.
Oh, I've done that.
We've been there.
And I started smacking it. And then, of course, what does it do? It sucks back up. And I'm like, oh, sweet. Oh, crap. What did I do?
Right. It's the worst.
And it ran all the way back up, and it went like this. Yeah, and I did what I thought it would do, right?
Yeah.
And so as soon as I recognized that I sold instead of bought, I had to just X out. And I couldn't ride it. So as soon as I recognized that, I just closed out of everything, and I took a pretty big loss. It was like a $400 loss, and it could have been a lot better, right? So even people that have been trading for a long time make new mistakes. And I'm going to chalk that up to midnight trading.
Yes.
Midnight.
Lack of caffeine.
Well, no, that's why I was trading, is you missed that story. I went to the gym yesterday and my wife gave me a double shot of pre-workout, and I usually don't do a pre-workout, and she made a double because that's what she does. And so I'm like, why am I so awake right now?
Sell. Oh, wait, no. Yeah, pre-workout is no joke.
Because my head shrunk a little bit, Pete. He's like, it shows. Your head's getting smaller.
Yeah, you look like you got stung by a bunch of bees, bro.
So that's why I'm like running on, like, I'm literally running on like 3.5 hours of sleep. And then of course, just kept waking up last night because I'm still getting active. No, I'm doing this every night. Like you guys are probably doing this too. Like I don't want to miss my alarm. So my body clock wakes me up like every half an hour. Did it go off? What time is it?
Yeah. Got to trade.
That's the worst.
Yeah. All right. So news is coming in to play here. If I was a betting man, I'd say this news. I don't know I haven't looked. Sometimes I'll look and see if there's sometimes they'll have insights as to what the news should be, what it's going to be. But I would say it's going to try and push it up to the dollar because I mean it's making its way back to parity, and so I would say that there's a good chance that that news events would help push it up, right? So I know it's factory orders, but sometimes you can have an indication of what the report will be. If it's going to be dovish or hawkish reports.
Dave, you had mentioned before that euro always try to push the price up and dollar down. Mm-hmm. How does that play throughout our trading? Is it opening, closing, throughout, or how does that work?
Like the banks, you say, or the news? So usually when it's positive, like strengthens the euro. If any news event plays to the favor of the euro, like let's just say the factory orders coming in and it's a positive report, it'll make the euro stronger. If it's not a positive report, it'll make the euro weaker. So it depends on that. If it's a European news or US news, right? Okay. And so if the euro gets stronger, it'll go up. If the euro gets weaker, it'll go down. The same thing with US. So if the dollar goes weaker, it's a bad report for the dollar, it'll go up. If it's a good report for the dollar, it'll go down. Right? So when Trump was in office, this is just a good example. When Trump was in office, he did not like a strong dollar. He liked a weak dollar. And so we saw price points of 115 to 120 during his whole tenure. Now, obviously, when Biden's in office, we've seen it dip below $1. Now, that's maybe not fair to the president, but he had a different philosophy than Trump. And so that's why we've seen the dollar kind of weaken on his watch. Does that make sense? Because Trump was doing everything in his power to bring jobs back in to America. Yeah. All right. So if it gets a pop up, like a huge pop, we will fade it. Oh, hold on. We need our spreads. Anybody see our spreads? What are our spreads?
1.5, 1.2.
Yeah. So they're not bad.
Yeah. 0.4.
Maybe the first stop hunt. That's a good point, Joseph. It's a good point. So we could have faded that, but it was just not. I mean, to me, if it pulls back anymore, let's go ahead and buy that. Because I don't think it's going to close above this. So let's go ahead and throw a few buys on. Oh, see if we can't get it a buy if it fades back down to that red line. But yeah, we can, if it fades back again, throw one on. I'm going to open up my chart because your view is not good because I can't see what's happening on the 5 minute or the hour. So, but that don't change it. I got it. I'll kind of tell you.
Whoa. Why is my view so crazy?
It's just your monitor is not wide enough to share.
No, that's not true.
No, not yours. I'm not talking about. Although it probably is true. It's so defensive.
My monitor is a
Your monitor
40-inch TV. So,
well, it must not be. This must be not like a 10K or something, or not 10K, but 1080 or something. It was just not giving us it's all truncated. All right. So, on the hour, it's kind of right up against it's not there yet, but I think it will go there. I think it will grow up to the next decision point. So we'll go ahead and build into these buys if it comes down. So if it fades down, we'll go ahead and build in. Our action point is going to be hard because we have no data to the left, right? So really, when we start trading on a news event or something like this, that what my rule of thumb is, anytime I get a breakout or anytime we're kind of in what we call an outside range, the rule of thumb is the next candle. So if we get this candle to close, the next candle that closes below. So if we get a blue candle that closes below that, I'd get out, but there's not a whole lot of meat on the bone right now. So I probably, I'd like it to get another 2 to 3 more candles up before I run that tactic. But if I'm feeling like we're going to get a pullback, I might peel off of this one trade that you're in. And that's okay. Now that it's shot up, now we use that strategy. Okay. So we'll hold on to this trade. And the next time a candle closes lower than the previous candle, so if it all comes back down to here and it turns blue, that's when we get out. Okay. And if it goes far enough away, like if it runs far enough away, I switch that to the 5-minute candles and I hold on to that. So the other thing you could do too is if it comes up and stalls, you could get out if you feel like I want to get out there on the stall, because anytime it stalls when you're in outside range, it will pull back and it pulls back hard like that. But I've been lucky or using this strategy, even on the pullbacks, it continues to climb and climb and climb. Now, on the 1 hour chart, it did kind of touch that with a wick right at our action point on the 1 hour. And so at the top of this candle is kind of that action point for the 1 hour. So I don't know if it'll break through, because if it breaks through kind of a resistance point on the 1 hour. So it could, and news events are likely to happen to do that, but it might not. So it's your call, Andrew, if you want to take your $10 or if you want to let it ride. Now you're only in on one trade. If I was in on more, like a layer of 4 trades, it may push me to take it. Does that make sense? Right. Because your risk is greater and your opportunity is greater. But this is a good training exercise for how you play this move higher, right? All right, so that purple line is probably a good place for it to stop, because that's like your reversal point right there on the 1 hour. So
how on those resistance lines up there, I don't want to say how reliable it is, but how do you want us to incorporate? Is that
these purple lines right here?
Yeah, those resistance layout.
So, well, obviously they're pretty reliable, or people wouldn't have them there, right? And so I kind of tend to look at them and use them.
Okay.
That doesn't mean I'm going to go heavy on a sell or anything like that. But exactly what Andrew just did. If it comes up and touches it, it's a really good place for it to kind of reverse and peel back. Now, normally when you see a candle of unusual sizes, you usually will get at least a 50% fib retracement off of that. And I don't think we're going to see that retracement start unless it touches that with that line. Does that make sense? And you could start to see that. But again, I'm still not into sell mode yet. I would be more into, if it comes down here, I'd buy mode and start putting some more buys on right here, because everything has been up today. Does that make sense?
Yeah.
And yeah, I'd rather play it safe. Like in a normal day when you have consolidation, I would have faded that. I would have sold that and come down, and because I would play that 50% retracement, right?
So on these runs that you have, David, and it sputters real fast, would you put a stop loss of like maybe 3 or 5 pips on there so that you can hit it as it sporadically goes?
Stop loss or take profit?
Take profit, I mean.
Okay, yes, because I would not do that on a stop loss. I just want to make sure we're clarifying. Yes and no. I would just do that in my head, because with Alveo, yes. MT4, no. It's just because it's so cumbersome to change your take profits in MT4, right? And so it's like, if I'm messing around with changing my take profits and going in and all that stuff, I might miss opportunities. But in Alveo, you can change that take profit really quickly. And if that's what you need, but to me, the better choice is just know where you want to take them and take them, right? Yeah, Khalid. I will say I've seen the chatter. I've been monitoring the chatter on your update, and I need to get back to you and provide you a little bit more feedback. So I apologize for that, but I love it. You have a great working of. So Khalid is making our version of basically Trader Agent. And I'll just give you a couple of feedback points. We definitely need this right here. That's why I haven't used it, but I think you just added it like this morning, I saw. So I haven't tested, but I definitely need the clock. To me, that's important to where I couldn't trade with it if I don't have it. And so that was one of my major feedbacks. And then Andrew, can you move this chart over that way so I can see the 5-minute chart? And the other thing that I would love if you could do is have this kind of accounting, exactly what you minimize it. So go ahead and maximize that.
My bad.
If there's a way where you can see what you've done today, this kind of stuff. I love seeing that. And so basically I know that if I'm Andrew, I'm in the hole this month, $744. So I got to recover $744 in order to be good on the month. And so this kind of gives me goals to work for, right? And so I love that. Or if I'm up, right? And so either way, right? So this is important to me. But I do love everything that you're doing. So I don't know how hard this is, and I didn't ask, but those are the two things that Trader Agent has that I find myself using, is the clock and this all the time. And then I think you have a sum, like if I'm in a buys and sells, or if I'm buys, I want to make sure that I'm positive. So if I'm positive, I can close out of everything and be done trading or whatever, right? As long as I'm positive, I can get that reset to 0, basically reset all my trades off and start over again. So those were the 3 things really that if you could add to that, I would replace Trader Agent in a heartbeat. So, but that's my feedback.
On the 1 minute, because I was changing those visuals on the 1 minute 0 take profit. I don't want the account panel, right? That should be false on the inputs.
You should just be able to load your 1 minute chart.
Yeah, it just popped up. It started popping everything up, like the dashboard on the 1 minute and the toolbar. So
if you go to Discord, you need to fix it. The easy fix is go to Discord, go to trading. There's a Loom video on there on how to grab the preset that I updated, but it doesn't have it doesn't have the updates fixed, but if you got to set all those up again, it might be easier just to load the new preset and then go back in and turn the views off, right? And trailing stops off. And I need to probably update that preset. I'll probably do that. But if we're going to flip over to Protégé, it's a moot point. All right. But on the trading, back to trading, you see how, like, if I'm trading this is where I would have gotten out once that blue line crossed, right? I would have gotten out of all of my trades right here, but you decided to get out of there. That's good. But now that it's crossed, what is this candle going to do? So I would anticipate the next move, and we're not going to trade this because we're up against the clock. The next move here is for it to consolidate, unless it decides that it's going to move higher. But again, if you guys are continuing to trade this, I would look just for buy opportunities today. And so if it came down here, I would have put a few more buys on, right? For the ride back up to here. So I would anticipate at some point it's going to consolidate and go sideways. Once it does that, that doesn't mean it's going to continue to go up. And consolidation means a change in market. Okay. Whenever you get a consolidation, now you got to reassess the market conditions. Are we still in a buy? Is it consolidating so that it can break down and come back down and test this, right? Is the consolidation changing price cycles? So anytime you get a consolidation, that means the market is now changing. And you've got to reassess after a consolidation. You got to go back to your 1, 2, 3s, trend, bias, and price cycle, right? So your 1, 2, 3s. Every time the market consolidates, you got to reassess. Are we still in the same price cycles? Did the price cycles change? Do I need to change? Do I need to go from 2 trades per layer, or am I back to 4 trades per layer? Right? So all these questions need to be asked and re-asked every time the market enters into a consolidation phase. And then it comes out, because it always comes out and you're in a different market, right? And so one of the key things to being a successful trader is learning how to identify what type of market that you're in and how to trade that type of market, right? And I used to say that every trader should have about 2 to 3 go-to strategies in their back pocket for different type of market conditions. And personally, this year, I've been just loving the wobble companioned with, and I should probably come up with a better name for this, but it's like the breakout. Right? The way that I trade the breakout, like we just saw today. This is exactly how I trade a breakout trade, right? It doesn't have to be a news event, but it has to come to the top, and with the 0 take profits and all that. So I should kind of come up with a kind of a cool name like the wobble. So you trade the wobble, and I've been doing great with these 2 strategies all year long. It seems to fit multiple market conditions. The only market condition that I do in the summertime is, Patricio knows this one, is I do have a name for it, and it's called the belay trade. And that is just because you get marching markets generally in the summertime. And so I'll add that as maybe my 3rd go-to strategy. Breakout. How about freak out? That's a quote from somewhere.
Or freakazoid.
I like it. But yeah.
So actually, I was going to ask you, David, would you use a belay here or not?
No, I wouldn't. So I usually only belay trades when we're up against when I want to protect my position. When I'm thinking that, okay, I'm thinking it's going to buy. I'm thinking it's going to go up still, right? And so the only time I would do that is if it came back all the way down to here. I would still think it was going to bounce off of that point, but just in case it doesn't, I may get into some shorts here on a run down. Now, I haven't really been using that belay tactic at all after the summertime, because generally it does bounce. And and if it does bounce, it means I got to close out. I got to get out of those for a loss, right? But in the summertime, when you get a marching market, it ignores price behavior and just continues to go in that direction. And so that's when you start noticing that it is ignoring price, and it does that primarily because you have fewer traders in the market than you do right now. So you have a lot more traders in this time of the year trading. And at this time of day, you have more traders in the market. And so more traders, meaning they're going to take different positions. So just a quick example, I'd rather have 100 traders putting buys right here than 10 traders putting buys right here, because the more traders that you have putting buys right here, the chances of the market going up is greater. Does that make sense?
Right.
So when you have more traders in the market, just because of time of year, you tend to have more of these solid bounce points that you can rely on. And so there's a couple times a year where you don't trade like that. Summertime being one, and wintertime as well. And wintertime is usually the last 3 weeks of December. You can kind of ignore. You're still going to get good price cycles and price action, but it ignores these bounce points because you got a lot of traders out of the market, right? Because of the holidays and whatnot. You can still trade it, but that's when I'd probably go back to more of a summertime using that belay tactic. And when we get closer to the holidays, even around Thanksgiving too, like that week of Thanksgiving, it's kind of, the market just shifts, right? There you go. That's what it's from, Pete. Thank you. Breakout. How about fake chloroform? You mean borophyll? Yeah. Water boy. That's where it comes from. I love it. Okay. Dad, real fast before you leave, if you haven't all said, I need your numbers because you're bouncing. So
I gotta go too.
Just put them in.
Yeah. Okay. That means I have to do the math.
Reminder on that spreadsheet, Dave. I know you're busy.
All right. Let's get our numbers here real fast. Patricio, how'd you do?
I'm at 23,070.55.
2307.
0.55.
Okay, 1%. Not bad.
Let me give you mine. I gotta go.
Oh yeah, I didn't know you were still here.
10,799.51.
Wait, 10709. You kind of cut out.
10,799.51.
All right, 1% too. Awesome, good job, Coolio.
Let me get out of this trade. Hold on.
Okay, Andrew. I guess I'm still trading with you, Jimmy. Since you got
5,123.92.
1.42. That's awesome.
Yeah. Appreciate y'all.
Thanks, Jimmy.
Now,
Yeah, Jimmy.
mine is 6832 and 58 cents.
2.76. Good job. Cool.
Nicely done. Cool.
Yeah. Cool. When I say put 2 layers on, Cool puts 4 layers on. When I say put 4 layers on, Cool
Dave, it's not 4,
layers.
it's 8 layers.
It's a mouse problem, yeah.
Yeah, it's a mouse problem. Yeah, he double clicked. Every time he puts 1 on, he puts 2 on.
Right.
I mean,
No, so Dave, what I'm
in
trying
this
to
session, because everything worked out, we called this session pretty much 100%, right?
Mm-hmm.
Was there opportunities that we could have taken advantage of? Yes, but I think I kind of weighed out the risk versus reward. We could have had some sells, but I didn't want, obviously we were kind of waiting for that breakout to happen. So right here, putting a sell on would have just been detrimental, right? Yeah. And so if we would have gotten to the habit of selling at the high point and buying at the low point, this is what would have killed us, right? Because we would have sold here. And I was like, no, the probability of breaking to the higher is greater. So we reduced our risk. and we minimized opportunities, I would say. But I think we played this market as well as we could have for this trading session. But because we were calling it good, we could have doubled our position size and got in a little bit, and that would have been a good opportunity. But we didn't, and we played it safe. But cool's the example of like, and I mean this in the nicest way, where if you're watching if you're working out from home and you have the personal trainer in the front and then the modified in the back. Well, we trade the modified, and cool's the personal trainer that's going hard.
No, Dave. So what I'm doing, what's helpful in the sessions that you've been doing is that I try to anticipate what you're saying.
Okay.
So I trade the anticipation.
as long as you're not pulling a Jimmy, and anticipating closing out of your trades.
I still need to work on that. I would get out of that. No, that's something I need to work on and look at the action points to get out or close to it, because I would get out too soon or a little bit too late. And so I definitely need to work on that a little bit more. So like, for example, on the LMFX, I look at it, it's like, if it's hovering around $3 or $4, I take it, right? And then it runs $5 or $6.
Sure. So who's owner? I'm not sure if owner is that's the first time I've seen you, but is that your real name, owner? Or is that just your stage name?
I think we're gonna have to, Dave, we're gonna have to put some rules in these things so we know who we're seeing. They're seeing us, they're seeing videos. Just a little maybe house.
I don't know if you want to do that. I don't know if you want to see people's video at this hour.
They can clean up. We can.
Then they're going to miss. Some people might miss the whole trading session altogether.
I mean, look at Drew.
That's true.
Let's not look at Drew.
There you go, Pete. There you go.
All right. So Andrew's numbers are 448118. So Andrew, 2% today, 2.04.
Good job, Andrew.
Good job.
Nice.
So we got a little bit of work to do to recover from last, but I mean, so I'm going to ask you, Andrew.
Yeah.
What is your takeaway from this session? I like to, so just so you know, I like to start, I'm going to start doing this after every session. So if you guys have takeaways too, that you guys like post in the chat, because I'd like to start, if you guys haven't noticed yet, I'm starting to throw them up on YouTube, and I'd like to differentiate each session with, instead of just the date, have like what the takeaways were, so that you're going back and looking at the recordings. You can be like, okay, this was a good training session because we learned this or that. And so you just kind of give me some nuggets that I can put in the description of the recordings so we can optimize them better that way. So my biggest takeaway is kind of combined today and yesterday, because I think my biggest takeaway is while we're doing these sessions, is to trade lighter and and then obviously to take my profit when I've got my profit, and not hold on to that hope and pray mentality. Sure. That I often get. So that's a great lesson to learn for sure. Yeah. One of the things that I've told some traders this, and I think Cool, if I can not pick on you, but use you as an example, about a month ago, Cool was getting himself into a lot of those hope and pray situations. And he came to me and he says, you know what, I have good days and I have bad days, but it feels like on my good days, I'm just getting lucky rather than skill. Right. And I've talked with him and I've worked with him. And I had to sit down and actually show him that by taking your profit and by taking losses, calculated losses, will actually make you more money. And so if you're an aggressive trader like I am, I mean, it's not my profile, and I'm going to have you take an investor profile, Drew, because everybody else has except for you. But my profile is analytical, or it's intuitive, methodical. And so I kind of feel the market, and then I need a systematic approach. That's why I work so well with the wobble technique of having if this then that, because I'm methodical in my approach. But I have a little bit of an aggressive nature where I fight in my own personal trading going heavy. And I had to learn that by starting out light and letting the market go against you, and getting in heavy at that point is so much better and so much more profitable than starting heavy. The market goes against you. Now you can't trade, or you put yourself into a situation where you're really in too heavy and you take catastrophic losses, right? Okay. And so I've learned through experience that I actually make more money by starting lighter. And so once you can learn that and have the confidence that you make more money in your consistent gains by starting lighter, it's going to make you a better trader. So I'm glad you brought that up for sure. And I love the thing that Robin said too as well, is a good takeaway is like, sometimes you just buy, sometimes you just sell.
Yeah.
Okay. It doesn't, and sometimes you buy and sell, but it's learning how to read the market. Right. And so, I love the comments. Anybody else before we sign off? Because these are the great exercise for sure.
Can I add something that I pick up, Dave?
Absolutely, Cliff. Go ahead.
And it's the price cycle. You said if it's greater than 10 pips, you should trade light.
Mm-hmm.
If it's less than 10, you should trade light, right?
Greater.
If it's greater than 10, you should trade light.
Right.
So
do you understand that concept? Just want to make sure that, because you said it, I want to make sure you understand it.
Yeah, but you're saying you're looking at different ways that we should trade. What are the times we should trade light? And one of them you said when we are at the breakout point, right?
A major breakout point.
Major breakout point.
Right.
But, this one about the price cycle, if the price cycle is greater than 10, because you're saying chances are it's going to turn.
Well, no, you trade light. So when the price cycles, when you're up against a major breakout, you trade light just because you don't want to be on the wrong side of the breakout.
Okay.
When you're trading 10 pip or greater price cycles, you trade light because you're going to double your profit targets. So normally if it's a 5 to 8, if it's less than 10, we're going for 2 to 3 pips. But if it's greater than 10, we're going for 3 to 5. Pips.
If it's greater than 10, you go for 3.
So you increase your take profits and you increase your take profits, but you trade lighter. Right?
And trade light. Okay.
So it's still mathematically the same.
It works out the same.
Well, it works out the same, but you don't want to be in heavy in case it goes against you 3 price cycles. Or I would say normal trading. You don't want to be normal trading in case it does go against you 3 price cycles, because that's a real thing. Because if it's 10 pip price cycles, now you're looking at a 30 pip loss on some of those trades, and you got to be able to withstand a 30 pip loss. And if you're normal trading, you might not be able to withstand that. And so that's the number one reason why we trade light on the price cycles.
Okay, great. That's the part I had missed, the number of pips you go for. All right, thank you.
You're welcome. Joseph said, great question, Cliff. Thank you. You had the same question. Last thing too, because I got called out on this yesterday, I'm going to put the onus back to you guys. Basically, if you guys hear me say something that you don't understand or it's foreign to you, Drew, ask me, because when I was in your shoes and I was watching Sean trade, he doesn't do a good job of stopping, slowing down, and explaining what he's seeing, what he's looking at. And I had the lucky privilege of filming him and turning what he was doing into marketing. So I had the privilege of saying, now stop, what are you doing here? Now, how do we explain it to people? Right. And I could do that only because we were putting out some education and all that kind of stuff. And so I learned that way, but it made me such a better trader when I said, stop, what are you doing here? What are you seeing? Why are you seeing that? And if you guys are finding that I'm just zooming, it's because I don't know that you don't know. And so you need to make me know that you know.
You know?
Got it.
So do me a favor and just either post it in chat, and I promise we'll have these recap sessions and I'll go over it if I don't go over it during trading. So if trading's too fast and we're executing, I will get back to it. And if I don't get back to it, repost the question, because we'll have wrap-up sessions like this. Because I think wrap-up sessions are very, very beneficial. We probably won't make them this long just because I want to be cognizant of everybody's time. But I'm just going to, just setting a few expectations here. But congratulations, guys. Great trading. Hopefully everybody that was following along was able to hit the 1%, 2%. I'm not, it's kind of a funny thing is like our goal is 2% a day, but I am not mad at 1%. You know what I mean? You gotta be able to be, that's the thing with traders. We get kind of delusional with money sometimes. Like, who would love to have 1% daily return on their money, right? And then, so why are we upset when we get like 0.5% or even 1/10%? Because there's people outside of here that would love to do that every single day. So the focus is not necessarily how much you make; it's how consistent are you. That's our focus.